It has never been easier to start investing than it is now. In fact, it is estimated that in 2023, 61% of people invested in the stock market. This is great news because the stock market is one of the greatest tools for growing your net worth, and the more people that participate, the higher the rate of returns. This video is meant to give you the information you need to get started in your investment journey. So to get started, what exactly is the stock market? Imagine the stock market as a giant marketplace where people buy and sell shares of companies. A share is like a tiny piece of ownership in a company. When you own shares, you become a shareholder, which means you have a small claim on the company's assets and profits. The stock market is a place where these shares are bought and sold. Companies sell shares to raise money for their operations and growth. Investors buy shares hoping that the company will do well and the value of their shares will increase over time. The prices of shares can go up or down based on various factors, like how well the company is doing, changes in the economy, or even public perception. When you buy a share and its value goes up, you can sell it for a profit. If it goes down, you might sell it for a loss. People who trade stocks try to make money by buying low and selling high. However, it's important to remember that the stock market involves risks, and there are no guarantees. It's like a big auction where the prices are always changing based on what people are willing to pay for a share of a company. One of the most recommended investments is the buy and hold strategy. Imagine you have a magical tree that grows fruit. Every year it gives you more and more fruit, and some years it might give a little less, but overall it's a fruitful tree. Now instead of picking the fruit every day and trying to time when to pick the most, you decide to let the tree grow for a long time. In the world of investing, that magical tree is like a good company's stock. When you buy and hold, it means you're getting that stock and holding onto it for a long time, like letting the tree grow. Here's why it can be a smart strategy. Time to grow. Companies like our magical tree can grow over time. They can become more valuable, and their stock prices can go up. Riding out bumps. Just like the tree might have some years with fewer fruit, stocks can have ups and downs. But if you hold on to them, you're giving them a chance to recover and grow in the long run. Less stress. If you keep checking and changing your investments all the time, it's like constantly digging up and replanting your tree. It can be stressful, and you might miss out on the fruits growing over time. Now about famous investors who succeeded with this strategy. Warren Buffett. He's like a grandmaster gardener. Buffett buys shares in good companies and holds onto them for a very long time. He believes in the power of time and the growth potential of strong companies. Peter Lynch, another gardening expert. Lynch managed the Magellan Fund and achieved great returns by picking good companies and holding on to them. These successful investors show that you don't need to constantly shuffle things around. By choosing strong companies and giving them time to grow, you can let your investment garden flourish over the years. It's a bit like planting seeds, watering them, and patiently waiting for a bountiful harvest. So, how do you get started? It is now easier than ever to start investing, simply using something that you carry around with you right now. In fact, you might be watching this video on that device as we speak. That's right, you can start investing by simply using your smartphone. Think of a broker like a friendly middleman who helps you buy and sell stocks. Here are examples of both commission-free brokers and older, more established ones. Commission-free brokers. Robinhood. It's like a fee-free store for stocks. Robinhood is known for not charging you every time you make a trade. It's straightforward and user-friendly, making it popular, especially among younger investors. Webull. Similar to Robinhood, Webull also offers commission-free trading. It provides a user-friendly app and some additional features for those who want to explore a bit more. SoFi Invest. Imagine a financial friend that not only helps you invest, but also provides other financial services. SoFi Invest is known for its user-friendly interface and a range of financial products. Established brokers. Fidelity. Picture a reliable, long-standing department store for investments. Fidelity has been around for a while, offering a wide range of investment options and services. It's like the trustworthy option in the investing mall. Charles Schwab. Think of it as the seasoned expert in the financial world. Charles Schwab has a history of providing investment services, and they offer a variety of tools and resources for investors. Remember, when choosing a broker, consider what features are important to you, like ease of use, available investment options, and any fees they may charge. Whether you go for a new age commission-free broker or an established one, the goal is to find the right fit for your investing journey. It's like choosing a store that has the products and services you need without breaking the bank with unnecessary fees. Let's go over a few different types of investing strategies so you can get a better understanding and hopefully pick a style that best suits you. Dividend investing. Dividend investing is like having a money tree that pays you regularly. Here's a simple breakdown. What is dividend investing? Imagine you own a small part of a company, like having a little piece of a bakery. Instead of just hoping the bakery will grow and you can sell your share for a profit, The bakery decides to share some of its profits directly with you. These regular payouts are called dividends. How it works, you own shares. Just like owning a piece of the bakery, you own shares of a company's stock. Company makes money. If the company does well and makes a profit, it may decide to share some of that profit with its shareholders. You get dividends. As a shareholder, you receive a portion of the profits in the form of regular payments, usually paid quarterly. Examples of popular stocks with dividends: Coca-Cola, KO. Think of it as the soda pop company. Coca-Cola has been paying dividends for a long time, and it's like getting a share of the soda profits. Johnson & Johnson, J&J. Imagine a company that makes Band-Aids and medicine. Johnson & Johnson is known for its stability and has a history of paying dividends. Procter & Gamble, PG. Picture a company that sells everyday products like soap and toothpaste. Procter & Gamble is another example of a company that shares its profits with shareholders. Why dividend investing? Regular income. It's like getting a paycheck from your investment regularly, providing a steady income stream. Stability. Companies that pay dividends are often more established and stable, making them attractive for investors who want a reliable source of income. Long-term growth. Over time, companies can increase their dividends, and the value of your investment may also grow. Remember, just like with any investment, there are risks. Companies can change their dividend policies, and stock prices can go up or down. But for those who like the idea of regular income from their investments, dividend stocks can be a sweet addition to their portfolio. It's like having a delicious slice of profit pie regularly delivered to your doorstep. Passive investing. Passive investing is like letting a helpful robot manage your money for you. Here's a simple breakdown. What is passive investing? Imagine you have a robot friend named IndexBot. IndexBot's job is to copy the performance of a big group of companies instead of trying to pick the best ones. This is called passive investing because you're not actively choosing individual stocks. You're more like sitting back and letting the robot do the work. How it works: you invest in a group. Instead of choosing specific companies, you invest in a group of them. This group is often called an index, like the S&P 500, which includes many big companies. IndexBot copies them. IndexBot doesn't pick and choose. It just copies the companies in the index. So if those companies do well, your investment does well too. Diversification. It's like having a basket with many eggs. If one egg or company doesn't do well, you still have others that might. Index investing spreads the risk. Examples of recommended ETFs and index funds with lower risk assessment: Vanguard Total Stock Market ETF, VTI. Think of it as a basket containing a piece of many companies in the entire stock market. It's like owning a small part of every shop in a huge mall. SPDR S&P 500 ETF Trust, SPY. Picture a group of the 500 biggest and most successful companies in the US. IndexBot mimics this group, so you don't have to worry about picking individual companies. Schwab US Aggregate Bond ETF, SCHZ. Imagine having a piece of a big pile of loans to companies and governments. This ETF is like owning a tiny bit of many different loans. Why passive investing? Less stress. Since IndexBot does the work, you don't need to constantly check and change your investments. It's like having a robot gardener who takes care of your plants automatically. Lower costs. Index investing is often cheaper because there's not much fancy decision-making involved. Lower costs mean more money in your pocket. Diversification. Instead of putting all your eggs in one basket, passive investing spreads your money across many companies, reducing the impact if one doesn't do well. Passive investing is like having a reliable robot friend manage your money with a simple strategy. Copy what a big group of companies is doing. It's a hands-off approach, perfect for those who want a stress-free and cost-effective way to grow their money over time. Growth investing. Growth investing is like planting seeds in a garden and hoping they grow into big, strong trees that produce lots of fruits. Here's a simple breakdown. What is growth investing? Imagine you have a garden and you decide to plant seeds that you think will grow into large, fruitful plants. In the world of investing, growth investors pick stocks of companies that they believe will grow rapidly in the future. These companies may be in expanding industries or have innovative products and ideas. How it works: pick promising companies. Like choosing seeds with the potential for big plants, growth investors select stocks of companies that they think will experience substantial expansion. Hold for the long term. It's like patiently watching your plants grow. Growth investors typically hold on to their stocks for a long time, hoping the companies will become more valuable over the years. Potential for high returns. If the companies grow as expected, the value of the stocks can increase significantly, providing investors with handsome returns. Examples of popular growth stocks: Tesla, TSLA. Think of it as the electric car and renewable energy company. Tesla has grown rapidly and is a favorite among growth investors. Amazon, AMZN. Picture a giant online marketplace. Amazon has expanded into various businesses, making it a classic growth stock. Zoom Video Communications, ZM. Imagine a company that became widely popular for online video meetings. Zoom experienced significant growth, especially during the rise of remote work. Quotes from famous investors. Cathie Wood is known for her focus on innovative and high-growth stocks. Here's a simplified version of one of her quotes. "I believe in investing in companies that are changing the world. It's like putting your money behind the companies that are planting the most exciting seeds for the future." In simple terms, growth investing is about choosing companies that seem poised to become big and successful, much like planting seeds for a bountiful harvest in the future. It's an approach that involves patience and belief in the potential of innovative and expanding businesses. Value investing. Value investing is like finding a good deal at a store. You look for items that are undervalued or on sale. Here's a simple breakdown. What is value investing? Imagine you go to a store and there's a section with items that are on sale or priced lower than their true worth. In the world of investing, value investors look for stocks of companies that they believe are currently priced lower than their actual value. They think these stocks are like hidden gems waiting to be discovered. How it works. Identify undervalued stocks. Like spotting items on sale, value investors search for stocks that, in their view, are trading for less than what they're really worth. Patience is key. It's like waiting for the right moment to buy something on sale. Value investors often hold on to these stocks patiently, expecting that the market will recognize their true value over time. Potential for long-term gains. If the market eventually realizes the true worth of these stocks, their prices may go up, providing value investors with a profit. Examples of recommended value stocks. Coca-Cola, KO. Think of it as the classic soda company. Value investors might see Coca-Cola as a stable company with a strong brand that's currently undervalued. IBM. Picture a technology company with a long history. Value investors may see IBM as undervalued, especially if they believe in the company's potential for growth. Bank of America, BAC. Imagine a big bank. Value investors might consider Bank of America as undervalued, thinking that its true value isn't fully reflected in the current stock price. Quotes from famous value investors. Warren Buffett is one of the most well-known value investors. Here's a simplified version of one of his quotes. "It's like buying dollar bills for 50 cents. The key to successful investing is to find good companies when the market undervalues them, and then patiently wait for the market to recognize their true worth." In simple terms, value investing is about looking for stocks that you believe are currently priced lower than what they're really worth. It's a bit like finding a great deal on something you know has long-term value. Value investors are like savvy shoppers in the stock market, always on the lookout for hidden treasures. So now it's time to get to investing. Picture a treasure map. Decide what you want to achieve with your investments. Is it buying a house, going on a vacation, or retiring comfortably? Knowing your destination helps plan your journey. Start small. Think of investing like planting seeds. You don't need a big garden at first. Start with a small amount you're comfortable with, like putting a few seeds in the ground. Diversify. Imagine having different types of plants in your garden. Spread your money across different investments, stocks, bonds, etc. This way, if one doesn't do well, others might. Consider time. Investing is like growing a tree. It takes time for it to become big and strong. Be patient. Don't expect instant results. Think of it as waiting for your garden to bloom. Understand risk. Think of risk like weather. Some days are sunny, some are stormy. Understand that investments can go up or down. Pick investments that match your comfort with risk, like choosing clothes for the weather. Use beginner-friendly platforms. Imagine investing platforms as friendly stores. Platforms like Robinhood or SoFi are like user-friendly shops for buying and selling stocks. They make the process easy for beginners. Stay informed. Think of financial news like weather forecasts. Stay updated on what's happening in the world. It helps you make informed decisions, like knowing if it's going to rain on your garden. Avoid rush decisions. Picture investing as a marathon, not a sprint. Avoid rushing to buy or sell based on emotions. It's like taking your time on a long journey. Seek advice if needed. Imagine a friend who's good at the game giving you tips. If you're unsure, seek advice from knowledgeable people or financial advisors. It's like having a helpful guide on your journey. Remember, investing is like tending to a garden. It requires some care, patience, and learning along the way. Starting small, staying informed, and being patient are key elements. Happy planting! I wish you luck as you begin your journey in the stock market. Don't forget to like and subscribe if you found this video helpful. Let me know down in the comments where you're at in your investing journey and what has been successful for you along the way.